Among cryptocurrencies with a similar market cap, with similar size, Berachain had been the worst performer in the last week. The question is why? Is this potentially a buying opportunity? Because in the end, crypto is all about buying low and selling high. We saw a drop of 27%. We are now at $3.08. And rarely have we been that low in the price. Is this potentially the right time to get in? By the way, the overall market just went sideways in the last 7 days. So there's something specifically going on for Bera. Now in this video, we're going to look at the drivers of demand and supply, because that in the end makes up the price. Now demand is simply how much is the chain used. The more usage there is, potentially the more Bera is bought. Now supply means tokenomics, as in how many new tokens get issued over time. The unfortunate fact is that most people don't really look at the relevant data. Most people's due diligence stops with the website, but this is not where we can learn more than the average market participant, right? If we want to buy low and sell high on average, we need to know more than the average participant. Now Bera is actually quite large. There's almost 1 million followers on X, formerly known as Twitter. And it's not just another meme coin, this is its own blockchain, which is backed by quite some large names. Now the decline of the last week was painful, but it's not atypical. Since the 7th of February, Bera went down by 65%. Relative to Bitcoin, Bera underperformed since the 28th of March by 72%. So what's going on? We've got a quite popular cryptocurrency, we've got its own blockchain, yet the price is developing that poorly. Now here's a first explanation. This is DeFi Llama. It measures the total value locked of different blockchains. So how much capital is currently locked up in a chain? And have a look at how this changed in the last month. Most blockchains saw an increase in its total value locked. Money was flowing into the system. For Berachain, we saw a massive decline of more than 50%. This is then how that looks like over time. We initially climbed up all the way to a total value locked of 3.5 billion. Now we are down to 1.2 billion. And one might make the argument that this is just the price development of Bera itself. That's actually not true. If we measure the total value locked in Bera, we also see it going down. So it's the same in Bera as it is in US dollars. The total value locked is going down, the activity of the chain is not growing. Have a look at the number of transactions over time. This tends to fluctuate between 1.5 and 2.5 million, with a slight tendency to decline. When we look at the number of active accounts, we see a massive spike on the 8th of February, and now again it tends to fizzle out. Let's have a look at the trading volume. In the last 24 hours, we saw 32 million of trading volume on the chain. Now this compares to 247 million on Sui, or to 1.1 billion on the base chain. And so when we look at the usage of the chain, when we look at the demand for Bera, right, how much attention is there for the technology? We unfortunately do not have positive momentum. But what about the supply? Maybe the tokenomics of Bera are better. Here's a quick summary. This is the circulating supply of Bera over time. And we are currently at 122 million. And 1 year from now, we will be at 190 million. So there's almost 3x's in the span of just a single year. And then it continues to go up and it continues to go up. And who's getting all of those Bera? It's the early investors and the team. Now we've already looked at Bera relative to Bitcoin. Here's Bera relative to Ethereum. Here the downward trend, especially recently, tends to be much more consistent. Yes, the last week was brutal. But again, it's nowhere out of the ordinary. We are seeing this all the time for Bera. And so if the demand and the usage of the chain is not growing, but the supply very much is, then where is the price going? We all know it. But that doesn't mean it makes sense to short Bera today. Again, in the short term, we might be somewhat oversold. But instead of buying here, right, instead of betting against the overarching trend and the overarching fundamentals, doesn't it make sense to just wait at least for somewhat of a recovery in the next few days? If we hit again the upper end of that trend, I think opening a position like this that bets on falling prices could make sense. Now there's a bit of a twist to all of this. The price discovery does not necessarily happen on the spot market anymore. It happens on the bets on the price, on the perpetual futures market. Most trading volume happened not on spot. So here's 16 million in Binance on the last 24 hours. When you look at the perpetual futures though, there was more trading volume, roughly 3 times the amount, again on Binance. So it's a short-term leverage that also moves the price. But have a look at this. The market is not stupid. The funding rates to bet on falling prices of Bera tend to be negative most of the time. So the shorts have to pay the longs in order to bet on falling prices. This is not what usually happens. For most cryptocurrencies, the longs have to pay the shorts in order to get more exposure, more leverage exposure to the price. Not so for Bera. The majority of derivative traders believe that Bera will continue to go down. And this is a bit where the danger lies. We clearly see how the spot price is impacted by the amount of open interest in the derivatives market. So the more bets there are, the higher the price goes and vice versa. But we haven't yet seen a lot of liquidations recently. Now, if betting on falling prices becomes too popular of a trade, so if this becomes more negative, if the shorts have to pay even more to the longs to bet on falling prices, then it doesn't take that much for Binance to initiate a short squeeze. So if enough people bet on falling prices, they just buy up Bera supply in order to push up the price and to force liquidate everybody. That's not that hard because the market cap of Berachain is only 377 million. It's not 1, 2 or 3 billion. It's relatively small. It doesn't take that much capital to push this up. But fortunately, right now, the funding rates aren't much more negative than usual. But again, I'm personally not betting on a falling Bera price just yet, even though the fundamentals definitely speak for falling prices. But we have simply sold off that much in the last week that we might see at least a bit of a bounce. And then again, when we are higher on that trading range, at least a relative short might make sense, right? We go long Ethereum and short Bera. Now here's something very important to understand. Crypto is highly correlated, as in when the market tends to go down, everything goes down at the same time. There's very little variation. This is true for the bear case, but it's also true for the bull case, as in most things go up at the same time. There seems to be not so much benefit in diversification, as in it seems to not really matter what kind of token we buy. If we have 5 tokens or we've got 20 tokens, the portfolio tends to move in the same direction anyway. Now the reason for those synchronized ups and downs in the market cannot just be money flows, because the money is flowing in and out of the overall space relatively consistently with little volatility. What we've got over here is the stablecoin market cap. And since October of 2023, we tend to go up over time. So there is money getting into the system. People deposit their fiat currency, say on a centralized exchange. The centralized exchange then sends it over to a stablecoin custodian. The custodian holds the funds in a bank account and then mints the stablecoins on the chain. And we can see that minting, but also the redemption on this chart. So the volatility that all prices go up or all prices go down, it's not caused by money flowing in and out of the system as a whole. Instead, I believe it's caused by the swapping activity. So people going risk on or going risk off. So it's not the market as a whole expanding or contracting, it's the participants within the market that swap. And we can see that swapping activity with much more volatility here. So this is now the stablecoin dominance. We're not looking at the stablecoin market cap, we're looking at the stablecoin dominance. How much of all of crypto is in stables? And in the last 1.5 years, this tended to move in a range between 9% and 5%. And now compare that stablecoin dominance with the Bitcoin price. When the stablecoin dominance is low, it means the Bitcoin price tends to be high. When the stablecoin dominance is high, it means the Bitcoin price tends to be low. So there is somewhat of an inverse correlation. When people deploy their stablecoins, or when they're swapping from risk off to risk on, when stablecoin dominance goes down, prices tend to go up. And so because of that overall effect of market synchronization, because of the high correlation, things move in the same direction at the same time, it's not a good idea to just look at US dollar prices in order to make a good decision whether or not to buy or sell an altcoin. Because charts like this are also influenced by the overall market swapping activity, not just by the swapping activity within the altcoin. So for example, this here, right? This is Dogecoin. And who would have thought that Dogecoin already peaks at 46 cents when in the past it peaked at 56, 57 cents? Who would have already anticipated the peak earlier? How could we figure that out? Here is how we can figure that out. This is Dogecoin's dominance. And here those two tops align very nicely. And so a dominance chart is simply a chart that looks at the current market cap of an altcoin relative to all of crypto. So that way we remove the ups and downs of Bitcoin or of Ethereum. We are just looking at the relative performance of the altcoin versus the rest of the market. And again, that tends to trade in ranges. And that's how we can find out how the second peak should actually happen earlier in US dollars, because the dominance was already at historical heights. But check out this, right? This is Shiba Inu in US dollars. But here's Shiba Inu's dominance. So we do have a quiet constant trend. Over time, Shiba Inu tends to underperform the rest of the market, and when we are high on the trading range, it might make sense to bet on falling prices. When we are low, we could potentially buy, but of course it's always somewhat risky to buy low when the overall trend is also bearish. So I personally prefer, when there's a declining trend, to look for short opportunities, so to bet on falling prices when we are high, and when we are in an upwards trend, to buy the dips. So when we're in a bull market, we buy the dips. When we're in a bear market, we short the top. And so Shiba Inu underperforms the market over the long term. So instead of trying to fish for bottoms here, isn't it better to just wait for the next short squeeze, to wait for the next rally in the price, to then bet on falling prices? Then the time is also on our side. Even if we see a bit of a spike above the regular trading range, we can just wait it out, because the overall trend is in our favor. That's not necessarily true when we buy, right? When we buy low in a declining trend, we might not find the exit on time and then have to sell again, potentially lower. Another example, here's Chainlink. And what we see over here, that's Chainlink's dominance. So just according to this chart, it might make sense to potentially buy some Link over just Bitcoin or Ethereum. Historically, it's rather cheap. Now, there are two central reasons why I like those relative valuation charts and those dominance charts. The first one is that we can actually see what happens specifically with that token, completely independent of the overall market. But the second reason is by plotting relative valuation charts, so say cryptocurrency A versus cryptocurrency B, we tend to see less volatility. We tend to see the trends clearer. For example, over here, this is the Ethereum price in US dollars since February of 2021. There's no clear trend. It's not necessarily easy to figure out when to buy or when to sell. But then we've got here Ethereum relative to Balancer. I like to look at this chart because it gives us two nice points. First of all, the overall volatility is rather small, but secondly, the gains are also extremely consistent. So this is an outperformance of 5,400%. This is how much Ethereum outperformed Balancer. And again, relatively speaking, with not that much volatility. Getting that much performance in a such consistent manner without having to time the market actively, that's quite unique, right? This is a risk to reward that we can only get with relative valuation plays. We can't get this just by buying something in US dollars. And again, the reason why everything in US dollars fluctuates so much is because the market as a whole goes risk on and risk off all the time. And that creates massive additional volatility. But we can get rid of that volatility. We can actually make money by buying this. Now, we don't just buy this, we have to set up a long Ethereum and a short Balancer position. So to get this performance, we have to do a bit of quote unquote financial trickery. But yeah, why do we see such consistent outperformance? The reason is that Balancer over time tends to have an expanding token supply. And a lot of that additional supply goes to liquidity mining. So to a lot of people that just get continued allocation to the token that then sell it off over time. And so this then differentiates the winners from the losers long term. The people that are willing to take one step further, they're going to look not just at the next 100x meme coin, it's likely going to go to zero, but that actually figure out what are the dynamics within the market and how can we profit from those dynamics. Those people tend to do better than just the people that buy and hold Bitcoin, for example. I have made dedicated tutorial videos on the topic. First of all, how do we even plot those relative valuation charts? How can we look at them? There's an entire tutorial section just on how to use TradingView in a proper manner and seeing the things that most people don't, right? Most people just look at things like this. This is not giving us any edge. But then there are also videos on how to actually execute those trades. How can we gain from relative valuations? How can we set this up? How can we continually make money with comparatively little risk? Now, most people here on YouTube are not willing to share their own performance, but I'm okay with doing that. I'm okay to share how much money I'm making on average over buying and holding Bitcoin. Because this is again where the big differentiator is. Everybody can get Bitcoin's performance, but actually the art in this is to make more than Bitcoin. If we take the time to trade actively, we have to outperform the benchmark. Now here are the monthly returns that I have made over buying and holding Bitcoin. So every data point is a month. This dotted line here is the 12-month moving average. And when we average out all of those dots, the monthly alpha over buying and holding Bitcoin for me is 2.1%. Now that might not sound like much, but that compounds over time. And then especially if we also add more money in the portfolio over time, we dollar cost average in, we have a quite nice smooth growth curve. So here's my active portfolio with trading and dollar cost averaging. And I hope that over the next 2 to 2.5 years, I'll be able again to double that portfolio. If we of course use leverage, we can make much more on a single trade. But I'm super cautious. I take very small bets. For example, have a look at this. I'm sharing my own trades. This is in the Gerhard Trade channel, and I opened again, based on relative valuations, a short of the Donald Trump meme coin. Trump relative to Solana was quite high, and it started to come down. And then our members also entered. They also had some leverage in there, so this was some gains. I waited a bit longer, closed this then at 141%. But because I only use 1 or 2% of my entire portfolio on a trade like this, the average alpha per month is only 2.1%. But if you're willing to take on more risk, you can of course grow much faster. Actually, our members do exactly that. So here's the channel, share your wins with some leverage and proper market timing and still reasonable risk management. There are several 100% in single trades easily possible. And so I think it's very important to forget about price targets, as in can Ethereum hit $4,000 or can Dogecoin hit $1, etc. Those kind of things don't really matter. What really matters is the relative performance. Capital within crypto moves from asset to asset. Attention moves from asset to asset. So there is all of the capital in the space. Sometimes it is risk on, sometimes it is risk off. But what really matters is where is the capital flowing to and where is it going away. And then all we need to do is to trade the relative valuation. It's much easier to make money that way. Again, would you rather hold this or would you rather hold this? And so yeah, feel free to check it out. It's currently $125 per month. You are locking in that rate. So when we come back to the 165 again in a few months, then you will still continue paying the 125. Whatever you're paying now, you will continue to pay. I will not increase the rate for everybody that's signing up now. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be also somewhere a pop-up here on the right where you can click directly. It will lead you to the website. So see you over there. Cheers.